How's it going, YouTube? Welcome back to another video. Today, I'd like to show you and discuss a little bit about cash flow assets versus non-cash flow assets. What's the difference between them? Which one's better for you and for each case, for each scenario? And let's go ahead and start it. So yeah, the introduction is, so in finance, assets can be categorized into cash flow assets and non-cash flow assets. Okay, we all know this. It's pretty basic, okay? Or some of us don't even know, but it's okay. So understanding the difference between them, between these types of assets, as well as their advantages and disadvantages, is crucial for investors looking to diversify their portfolios across financial instruments, including forex, crypto, stock market, treasury bonds, options trading, and many other things. So that's pretty much what I separated it here. Okay. So what you have to understand is that we have cash flow assets and non-cash flow assets, guys. That's the first thing we need to understand. And a lot of us, when we first start investing, we don't even know it, and we don't even take that into consideration. And like, I'm not here to tell you, okay, if you go to the left or if you go to the right, it's better, because I think every strategy is very personal and it really depends on what you want. Like, some people, they want to have a monthly income. Some people want to have dividends forever. Some people just want to gain from the appreciation of a certain market or a certain asset, so they don't care about monthly income. So it really depends. Like, some of you guys want to have liquidity, and some of you guys don't want to have liquidity. Some of you guys can mix them all together. So it's really basic. So there's no such thing as right or wrong, and I always say it, but I just want to show you what it is, so you can have that little bit of knowledge here and apply that into your life and into your current situation. So let's talk about cash flow assets now. So cash flow assets are financial assets that generate a steady stream of income over time. Okay, so these include dividend paying stocks, rental properties, and real estate, for example, bonds that pay regular interest, and certain types of option strategies that provide periodic returns. For example, covered call or cash secured put, or any strategy and options that's gonna limit your profit, but also you gain a monthly income, or quote unquote monthly income, because that depends on the market, but you could technically saying generate monthly income with it. Okay, so like I said, there's no really right or wrong here. It really depends on what you want, but overall, I think most of these cases can be beneficial to you. So the advantages here with cash flow assets is you have a steady income. Okay, and that also depends as well, because that depends on what you're doing. But let's say technically you have a steady income, so provides a regular income stream which can be reinvested or used for expenses. So for example, let's say you have a portfolio of stocks that are generating you cash flow, that are generating you dividends every single year or every 6 months, or whatever the case may be. And you do have, in a way, like, so you kind of know that the next 12 months, doesn't matter if the market goes down. Like, let's say you have like 10 stocks or 20 stocks, or I don't know, 5 stocks, and all these stocks, they are generating you passive income or dividends. So you know that no matter what happens, you're still going to have cash flow, and you can do pretty much whatever you want with it. So whether it's paying your bills, or whether reinvesting in some other work or in some other company, so you have other streams of income, because that's the ideal. You know, ideally you want to get the money that you get from the market, or reinvest it again in there, or reinvest in some other project for you that it's going to generate you passive income. So whatever the case may be. Okay, so you can have multiple streams of income to keep you safe, and especially if you are an entrepreneur, because you don't have a fixed salary, and we need to, you know, kind of be covered up with ways in which we can kind of fall back on if something doesn't really work out for us. So if something on the left doesn't work out, we can go on the right side and we can get something from there. That's what we get. That's what we get when we are entrepreneurs. So that being said, we have lower risk as well. So lower risk, generally considered less risky, as they provide regular returns. But like I said, that depends on the stock that you pick. That depends on the portfolio that you're building. That depends on your correlation. Like, do you have correlation on your stocks? Do you know what you're doing? Do you have liquidity? Do you know anything about the companies that you're investing? Have you made your analysis? You know, do you know their gross profit, their debts, like everything? You need to know about literally everything. It's not just buy one stock here and there and then leave it there, because you need to make your study and your research. Okay. Number 3 is diversification. So adding cash flow assets can diversify straight income streams, which is basically what I just said. Okay, diversification here is, I think, one of our best friends when it comes to being an entrepreneur. Like I said, you need to have many streams of income to fall back on if something doesn't work, and eventually over time they all grow kind of together. And like I said, you need to get the money that you generated from this and then invest in something else that are also going to generate you more money, so then you can have your future at least a little better off than someone that's not doing it. Okay, now here are the disadvantages as well, because not everything is perfect. Okay, everything that are benefits and the other word, benefits. The other word that the contrary to benefits, which I don't know because English is not my native language, but you know what I'm saying. sorry. So let's continue. So here's the disadvantage here. So lower growth potential. These assets typically have lower capital appreciation compared to non-cash flow assets because it's less risky. Okay, so like I said, risk return, they go together forever. If you want to have more return, you also need to understand that you're gonna have more risk. So it is what it is. There's no way that we can run from it. There's no way. It's just how the system works. Okay. To inflation risk. So regular payments may not keep up with inflation, reducing purchasing power over time. But also that depends as well. But you have that risk as well, and you also have tax implications. So regular income might be subject to higher taxation depending on jurisdiction. That depends. Okay, but it is what it is. And now we have non-cash flow assets. All right, so basically non-cash flow assets are financial assets that do not generate regular income. So these include growth stocks, certain cryptocurrencies, actually all cryptocurrencies pretty much, unless you're doing like staking or yield farming or something like this. But I'm just going to generally say that cryptocurrency, commodities like gold that do not pay dividend or interest or anything like this, or even Forex. Like I teach Forex on the channel, but I do know, and I always let you guys know that Forex is not generating flow assets, and it's not even an asset. It's more for speculation. Okay, because what you're doing when you do Forex is literally speculation. Like, I don't even like calling like Forex investment, so it's really up to you. But I'm just gonna say that everything that is not cash flow generating, then it's really more of a speculation more than investing. So like there's a difference between investing and speculating. That does not mean that speculating is bad, or if you're going to invest, you're going to be better, or whatever the case may be. But you just need to understand what you're doing. So pretty much if you understand what you're doing, then you're okay. You can do whatever you want. You can speculate, you can invest, you can do long-term investing, you can do short-term investment, you can combine them both, can combine them too, or whatever the case may be. You just have to understand what you're doing. So if you understand what you're doing, and you fully understand like 100% of the risk that you're taking when you're investing in something, and you know that you can lose everything, and you know at a certain time you understand pretty much everything, and then you're safe, because you know that worst case scenario, if the worst happens, you're going to be ready for that because you prepared yourself for that. That's what I'm trying to say. Okay, so advantages here. So let me just finish. So for example, cryptocurrencies. Okay, Bitcoin usually saying does not generate you cash flow, but you can do like staking, you can do yield farming, you can do many other things. But I'm just gonna say, like, again, Bitcoin, Forex, or some of these penny stocks, some of these stocks that are from small caps that are really not generating you anything yet, or these higher risk investments, super high risk investments that are not cash flow generating. Okay, and even, like I said, gold and commodities, so silver, gold, and many other things. I would even say like oil, maybe, I'm not sure, but so let's talk about the advantages. So high growth potential. So they often offer a higher capital appreciation potential compared to cash flow assets. That depends though on what you're doing, but yeah, typically saying that that's what you aim for when you are investing on non-cash flow generating income. Number two, so capital gains. So profits can be made by selling these assets at a higher price than the purchase price. Okay, and hedge against inflation. So certain non-cash flow assets like gold can act as a hedge against inflation. So like I said, everything is good. Like if you know what you're doing, and if you truly know what you're doing, or at least you're trying to know what you're doing, you're not just randomly opening an account because you watched the video on YouTube and then putting all your life savings into some dumb investment that you know nothing about. So even that can be good for you, okay? Because like I said, you can use everything for everything, okay? For hedging, for generating income flow, monthly income or cash flow. You can do arbitrage, like you can pretty much do them all together. So it's pretty interesting on how you can combine them. And here are the disadvantages as well, because not everything is perfect. Like I said, everything has its good and its down and its bad side. But it is what it is. Now, there's no regular income. Like I said, they do not provide a steady income stream, so which can be a drawback for income focused investors. High risk, so they often have a higher volatility and risk, especially in markets like crypto or growth stocks, okay? And especially I'd say those really new altcoins, you know, I don't know, like Shiba Inu or all these crazy altcoins out there that like they do like 10x in one day or 100x in one day or 1000x in one day. Like that's completely insane to me. But I'm not saying that you cannot do this. You just have to, again, know what you're doing and do not put all your money into some crazy shit. You could get lucky though, but I mean, you shouldn't be putting your life saving account, your life savings, into some luck project or some shit like this, because that's not ideal, right? Just think about it. We need to have common sense, guys. Okay, unless you want to be some crazy guy, but I wouldn't advise you, because you got to be ready for the worst, okay? And if that happens, are you ready to face the consequences of that? So that's what I'm trying to say. And then number 3, lastly, requires timing. So successful investing in non-cash flow assets often requires market timing, which can be challenging. And that's it. So the conclusion here, both cash flow and non-cash flow assets have their unique benefits and drawbacks. Just learned the word. So the word that I was looking for in the beginning of the video was drawbacks, or is there any other word? I'm not sure. I'm sorry. So here, the choice between them should depend on the individual financial goals. So risk tolerance and investment strategy. So a balanced portfolio often includes a mix of both types of assets to optimize growth while managing risk. Okay, so that's what I wanted to show to you guys on how we can do this. And that's pretty much it. Some people, they are fully conservative. So some people, they want to put like 100% into treasury bonds. They don't even like any type of fluctuation or any drawdown or anything like this. They just want to have completely fixed income, and they're not even focused on making money with it. They are focused on their work. So the money that they generate on their work, they're going to put into low risk investments such as treasury bonds, for example. Some people, they want to have a mix of both. Some people, they're fully opposite. Like some people, they want to have like 99% or 95% into high risk investment. I wouldn't even say high risk investment. I would say like stock market, for example, to which you don't have liquidity like at all, but you're investing in like, I don't know, maybe blue chips or something like this, and then like 5% is their cash flow on treasury bonds. So they're totally the opposite. And the craziest thing is that it could work really well for both. Some people, they are more like very, what's the word, they're very flexible, so they can do pretty much whatever they want. And personally, I am more of the type of dude that's gonna do pretty much everything, because I like playing around with it. So I am a trader, but I'm also a long-term investor, but I'm also a short-term trader, also medium-term investor as well. So I pretty much do whatever it is. I do string trading, I do day trading, I do options, I do also have treasury bonds that I want to talk about, also long-term investor, also entrepreneur. So I like to play around with it. So I like to mix many markets. So, you know, mix forex with options, with crypto, with treasury bonds, with this, with that. So it's kind of like what a hedge fund does, I would say, or not, you know. But I like being dynamic, because one thing I learned in life is that if you're dynamic, you can learn so much more than you being stuck at one thing. And even though like it could work really well for you, example, if you're stuck in one thing, but the problem with stucking and focusing on only one thing is that sure thing, you might be really good at it, but you also miss the chance of seeing things from a wider perspective, I would say that way, and then learning more. Because when you see something from a wider perspective, you can compare more things, and then you can learn a little more, I would say. But that's very personal. I'm not saying that my opinion here is right or wrong. I'm just saying that's the way I learned it. That's like those are things that I see on a daily basis from people that focus on only one thing and people that focus on many things. And also me, when I first started, I just focused on one thing, but as time passed, I wanted to know more and more and more and more and more about the financial instruments. And then I realized that the more you know, the better it is. Okay. And although you may not be like the best at every single thing, you can get really good at many things. And just if you are really, really good at many things, you can play around with it, and then you can take the best of it and be very, very dynamic and teach it to many types of investors and ultimately make money with it, which is what we want, and then have a little more stable future for us, because we know how hard it is living in this world without money, and we need to understand what we're doing. Okay, so whether you have a job right now and you're making money from your job, or you are an entrepreneur, or you're making money using content creation, you need to get this money that you worked for and invest on the right place, so you have something to fall back on in your future, or for your kids, or whatever the case may be. So that's it. Thank you so much for watching this video. I'm sorry for any mistakes in English. It's not my native language, but I'm trying my best here to make sure you understand me. And I'm also training oratory, because I want to make sure that you guys understand me fully 100%. So, you know, it's all about giving the right communication, and you can learn and you can build something more sustainable than building a relationship of lies. And that's why I'm never gonna bring any type of content for the channel that I don't fully believe or I don't use. Okay, so you're never gonna see me here coming up with some bullshit just because like, oh, how to make money watching videos or that kind of shit. Okay, I'm not here to shit over anyone's work, but I'm just saying that we need to have common sense. Okay, I want to bring something real, not, you know, this type of shit of like, oh, how to make $1,000 a day, you know, not doing anything or watching TV or that kind of shit that they sell for you out there, which is totally stupid. And I don't even know how people fall into these things, but it is what it is. But yeah, thank you so much for watching this video. Thank you. Subscribe for more, and I'll see you in the next video. Bye.